And now, I guess, the main part, because I want to introduce our guest speakers who agreed to join us today and share their knowledge with us. So first is going to speak Mindaugas. Mindaugas Grajauskas is a consultant at OVC Consulting. Mindaugas has also written a book, so that's something, to scream about. Exciting achievement, and the book is about personal finance also, right? And overall, Mindaugas is finance enthusiast, so that's why we have invited him to join us today. And Vaidotas Rūkas is Chief Investment Officer of INVL Asset Management, has been working with asset management and investments for a long time, and he will take on the word after Mindaugas to talk about investments. So today the topic is sort of light. It's personal finance, personal investments, how to manage costs, how to save. And I guess let's now enjoy the day, the rest of the day, and let's have fun. So Mindaugas, the word to you.
Okay, so my journey began in 2012, I think it was. I was in the seminar, and the speaker was giving some tips, some ideas, some models on how to deal with personal money management. And I felt quite strong feeling of shame, because at that time I only knew how to earn money. And I didn't know that there is a topic how to spend money. I thought it was obvious. Now, 7 years later, I see that this is the essence, not just to earn more, but to be wise enough how we spend our money. And so I started to look for help, asking different people, reading different books, how to deal with my own money. And have you ever felt the moment when you realize that you earn more money than year before or a few years before, and then at the same time you spend the whole money you earn? Have you found yourself in a situation like that? And so the idea is this, that we have to take care about our income. Well, when we think about taking care of our income, we want to increase our income, the level of it, and the thing we do, or we should do, is to think about how many problems of others we solve, or how big problems we solve. And then at the same time, we should think about how we spend our money. And so I started to look for the model how to deal with the money, especially in family, in couple. Have you ever have you been in situations when you have some conflicts or difficult situations within the family about money? Yeah. This topic is not that easy. It's very intimate. Because we have different attitudes, what the money means for us. And so I started to look for the answer for models, and with my wife, we started to experiment with different ideas, different models. And then we came up with some very concrete, very easy to use model. And then some people started to ask me how you do something. And I got bored of this question, because most of the time people were asking the same questions, and I had to answer and to give them the same answers. So I decided that I write the book, and whenever I get the question, I just refer to the book, read the book, and that's it. So yeah, this is not the main activity that I do. Most of the times I'm working as a business consultant. I help companies to grow, not in the field of how to deal with the money, but in other topics. And this journey of personal finance management was very personal, very intimate. And I took 4 years to come up with something like this. And now I have a very difficult situation to explain it in 15 minutes, less than 15 minutes. So, okay, yeah, 10. So, and so, yeah, I try to think about what is the most valuable aspects that I could share in those 10 minutes now. And I decided to talk about the model of life in the perspective of finances. And I decided to share with 4 different objectives that I think is the most important for a human being. And so this is the diagram. This is a part of the diagram, which I didn't know some time ago. And when I saw it and I was introduced to this the first time, I was surprised that this is so simple and very little amount of people are using it and implementing it in their own lives. So you see that on this axis your income, the level of your income, and this is your age. So we are born here and we die here. It's normal. And so we can divide our lifetime into 3 different phases. The first one is inactive period through the finance perspective. So this is when we are children. We know only how to spend money, the ones that we get from our family or other resources, and yet at that time we don't earn money in order, in sense of creating value for other people. And so the second period is our already active period, and here we start earning money, and in time, with our higher competences, more experience, we earn more and more as we age. Sometimes it happens that it doesn't seem like this in this diagram, because sometimes we are for some time at the same level. Sometimes we can go down a bit. Sometimes we can go up quite intensely. But still, if usually it should go like this. It's not that pretty in life, but the principle is this. And then at some time, we stop with our income, and we start the third period. Can you guess what is this? Retirement, the pension. Right. And so at this level, we don't have any income from our, we don't go to the job, we don't get the salary. What's happening here, together with our level of income, there is something else going up. Can you guess what? Expenses, exactly. If we don't do anything, the amount we earn is the amount we spend. Sometimes it's even more. And here, all of us have an issue. And it's a very mathematical game. And of course, you already should know at least, and I'm sure that you know, that this issue could be solved like this. Some part of the money we save for the retirement, and I'm sure you know all the different tools for that. But most people do not think about this time because it's too far away from today. And I used to work more with especially young people studying in schools, with students, with people about 30, 40 years. And the thing they say most of the time is this, that it's too far away, I'll take care of that after I take care of something else that is closer. For example, a new car, a nice vacation, or a new iPhone, or big house, and it's or second car. And I will start explaining those 4 different objectives from the back. So if we name, this is the first objective that we should look for, is how we raise and what amount of money we raise for as our pension capital. And there are different tools, different strategies. In this book I explain all the strategies according to my understanding. Now I don't have that time for that. But this is just the idea that the moment we get our first salary is the moment when we start saving for our retirement. And you know what most of the people do when they get their first salary? Some of you might still remember that, right? And it's not a new iPhone, I think, or something else. So yeah, so this is what is actually important, because it's not the amount of money is important in the beginning. It's the behavior what's the most important. And so the more time we have here to accumulate our capital for the pension, the easiest it goes for the whole time. And so this is the first objective, and we all should take care of it with different tools and strategies, whatever we can come up with. Then the second objective is this. is that we all have to have our financial security fund, and I'm sure you have already heard these words. What does it mean? It means that we have to make sure that we have 6 to 12 or even more months the level of income that we could survive this period of time without any income. Do you have those kind of money? Please do not answer that now. Just think about it. And it's not the money that we're saving for something. This is the specific objective, specific goal, to have this money, and if it all goes well in life, we never use this money. We only have this money to have this security, and then we can be more brave to accept some challenges, to accept some I don't know, some opportunities in life in order to increase our income. Because people are too afraid to leave the job, because the next month it could be very rough for them if they are quitting the job right now at this moment. And I have this example of my own. I wouldn't be that brave to take the decision to quit my well-paid job in Lithuania and to accept the challenge to go to live in Belgium without any offer. Because I had this, I was brave enough, and I see it now in the perspective that it paid well. It paid off well. So this is the second personal finance objective, to have this amount of money which would cover all the needs that we have in a month. So 6 to 12 months or even more. And then this is quite obvious for most of us. Now it gets tricky here. We have number 3. And I know when I say, people sometimes, they react very differently, but this is the objective of gaining the financial independence. Financial independence. And if you told me this 7 or even more years ago, I wouldn't believe a word. Because I thought that financial independence doesn't exist. Or it does, but not in Lithuania, and not for regular people like us. And so when I started to learn, I understood that regular people can easily find ways how to get the passive income. But there are some conditions for that, and I will talk about them later. So the idea is this, that we accumulate a part of our money, we save it, we invest it, and by this we are increasing our level of income. And it doesn't matter if we don't go to work in the morning. Passive income still comes in our bank account or other assets. And so the number 4 is very easy. It's our higher life quality. It means bigger house, nicer car, more vacation, more flexible time, and the things that makes me happy or feel better or more comfortable in life. And when you think about yourself and when you think about other people, when you have 1, 2, 3, 4, where most of the times people start focusing their money on which objective? Number 4, yeah, because it's more shining around us. And most of the people don't think about that because it's too far away. And it doesn't mean that we have to, we have to complete this and only then we can go to here. It means that whenever we get our salary, we should distribute the money. It's not here, but we all understand that we have our needs on a daily basis. And then we have to save part of our money and then to distribute according to our situation, according to our strategy. And most of the times when I work with people, they say that there's nothing left to invest. And sometimes it seems that, okay, so 10 euros or 15 euros or 100 euros, it's not worth your time to invest it and get like, I don't know, 100 euros a year as a passive income. But at this time, it's not the amount of money what's the most important. It's the behavior what's the most important. So when you get your salary, this is how you distribute your money. And the question, which is not very popular, or people usually they don't ask this question themselves, what will I do, or what would I do when my income will increase? Do you have this answer to yourself? Do you have the clear answer? What will you do when your level of income will increase? Most people don't. They don't have this question, because what kind of question is this? I'm wise enough to understand how to spend my money when I get more of them. But actually, when it will happen, and it will happen, most people will spend money here. And yeah, you will have a nicer car, a bigger house, or the second car, or new iPhone, or whatever you want. But at the same time, it's important to increase our level of quality in life. But at the same time, we have to take care of the rest of the financial objectives. And so, how to do it? And this is not a popular answer. How to do it is to build a discipline how we use our money. Like, for example, I have a phone, and whenever I spend my money, it doesn't matter if it's 10 cents, I always make a mark where and for what I spend my money. And so here you can build your budget, how your spending looks like. And you can have like an Excel sheet. I have a lot of them. You can have any kind of app that you can use. You can have a piece of paper and a pen. It's just a plan how you're gonna distribute the money you have, and according to next to your the cost of your needs every month, you should include those 4 objectives. 1, 2, 3, 4, and you can choose the amount of money. You can choose how you save them. Here, the recommendation, or at least what I do, is having a deposit in bank. Do you know what is the rate of the deposit in the bank for the moment? Around 0 in the bank, or in the banks. But if you go to the credit union, you know what's the rate there? 2 to 3%. It depends on the period, and it depends on the institution as well. So here, at least, it's not the goal to earn money. It's the goal to compensate the inflation, at least part of it. And it's if all goes well, you never use this money. And so, whenever we have our money, we distribute. And the trick is here. Sometimes, and I could guess that for some of you right now, you might think like this, that okay, so I have amount of money, and whatever is left in the end, I will save. I used to think like that, and it never worked for me. And the trick is this, that we do not save what's left, we use what's left. So we decide, we calculate, and we decide how much money do we save for what. For maybe here you can build some separate goals. For example, new car, new, I don't know, computer, new house, or whatever you want. And so you decide it, and then you decide the amount of money. You check if your calculation is based on your level of income. So you do not spend more than you earn. And then the moment you get your money, you distribute, physically distribute. Sometimes you can use the different wallets if you don't trust banks. I know some people who does that. Most of us, of course, we can use different bank accounts in order to be sure that we will not spend the money that has a different purpose. Either this, or this. So the idea is this, to take care of your spending first, and then take care of your income. Some people say that it's hard to earn more money. Do you agree with that? It's hard to increase your salary. I have this answer for these kind of people, that if you want to increase your salary, you might focus on 2 things. 1, solving more problems of others, or 2, solving the bigger problems of others. And then you can ask for a compensation, which would be adequate for your value that you create. And this will happen anyway in most of our lives. And the second thing what we should be looking for, how we spend our money. And these are the four main objectives that we should take into account when we are planning our plan how we distribute and use our money. So this was the idea. I'm not sure if I fit in 15 minutes or something. And for the questions, we will transfer them to the panel discussion.
Yeah.
I guess, yeah.
Okay, good. That was an introduction, sort of. Well, we changed the mic from Mindaugas to Vaidotas. Just a short notice. This was first introduction. Vaidotas will give another introduction, and then we'll have a discussion.
Okay, hello everybody. I'm Vaidotas Rūkas. I'm not so big expert in personal finances Mindaugas because I haven't written a book, but I did a presentation of 15 slides. So 1 minute for each slide, and it's 3 parts of it. So every presentation should be included with a famous guy and quote of it. So this is Ray Dalio. Maybe it's not a well-known person in Lithuania, but it's probably the most top 10 influential person in finance world. And the quote I chose by him is not really typical, because the quote sounds like one of the most important decisions you can make is who you ask question of. So how does it relate with the presentation? So you can see in this slide. So my company INVL asked people, so who do you trust the most when you seek for financial advice? So of course the biggest part of people rely on the most clever person, himself. So the rest of people trust their close relatives, spouses, parents, and so on. So it's really close circle of people, of persons that people in Lithuania trust the most. So financial consultants, just 7%. So I probably you are the 7% among all Danske employees from 3,000 people. Maybe I can ask you a question. So who do you save? So please raise your hands if you save. Oh, I see that most of you do. Our question is and answers are the same, really similar to them. But can you raise hands if you invest? Okay, so it's like 10 to 20% of you. So most of you save, but just 10 or 20% invest. So it's really similar to our answers in questionnaire. What does it mean? To my mind, investing is intelligent saving. So if you save but don't invest, so you are wasting your resources. And you should invest save intelligent way. And why do people don't invest? I think that it's because of lack of financial literacy. People don't understand and can evaluate how compound interest work. So this is example with bacteria, so it's really impressive example, but if you take fast credit, so you can understand how it works for the opposite way and how can you end up. But of course, if you save and invest, so you can understand how compound interest works for you. So this is end of part 1. And when we asked people, why do you save? So the answers were like that. So, but I made a grouping of that, and I found out that there are 3 reasons. So one of them is additional revenues, or as Mindaugas told, financial independence, let's say, or to get more money from your investments. That's really nice. We'll talk later about that. The other group is simply delayed spending. So you are saving for your new home, for children education, for car, second car, but it's not saving. It's simply delayed spending. And the third group is insurance. What kind of insurance it could be? So I think that there's major three groups of insurances people are saving, or you have to save, is to face with unexpected expenses, pension, or decreased or no income. So let's dig deeper into these topics. This is statistics by official Lithuanian statistics, and it was shockingly data for me, because I haven't seen it earlier. I did this just before the presentation when I was doing. So 50% of people in Lithuania can't afford to cover unexpected expenses if they reach less than 300 euros. So imagine that our pensioners probably have those resources, because when they are called by some guy and asked for money for their grandson car crash, so yeah, they can find 10,000, 20,000 euros in an hour. So 50% of the population in Lithuania can't cover. I hope you can, but I don't think it's related with lack of income. It's because of spending. And it's almost the same situation in US. The country is great, income is much higher there, but the percentage of population that can't afford unexpected expenses is really similar to Lithuania. So no, it's not because of poverty, it's because of financial literacy. So the second group is pension. So the maximum compensation by Sodra is 700 euros. So it's maximum. Average, I don't remember, but it should be below 400 euros. So I believe you don't want to live with this amount of money in your pension. So yes, you have to buy insurance. I mean, buy insurance, so yes, you have to save it, invest it, and the way how you can do this is use pension funds, third pillar, or whatever, but you have to think about it. Third, insurance, the type of insurance is this type that nobody discusses about it. But I think it's really serious, because if you see the statistics, you can visually see that there's quite significant decrease in income when you are 45, 54 years old. What does it mean? So let's not dig into the reasons, but it means that when you become experienced employee, so you statistically you can face with a downgrade in your salary, whatever the reason it is. And when you are like 45 years old, so what are your needs? I think your needs for salary and for money are probably the highest, because you already bought your new house, so you have mortgage, you have second car lease, you have your children late teens with a need for education, for smartphones and whatever. So your needs at this age group is probably the highest. And suddenly you might face with a downgrade. So yes, you have to prepare the insurance at this for this stage. So when you are, I can see that you are late 20s or early 30s. So when is the time to prepare for this, let's say, unexpected event. So this is the end of part 2, and part 3 is simple rules. Of course, Mindaugas wrote the whole book with 300 pages. These are just 6 rules. But 300, yeah. So of course, those rules are so simple, obvious, and whatever. But I'm sure, and Mindaugas can agree with me, that 90% of you fail. Not you, but 90% of population fail. Of course, I hope that you don't use those fast credits. So because it's rule number 1 to pay off them. Yes, you have to save financial buffer for emergency expenses or for a period without any salary. So you mentioned that it's even longer period. Okay, so rule number 2. Yes, you have to have health for life insurance, but just if you have a dependent, for example, children that relies on your salary. So if you don't, so probably there's no need to do that. The 4th rule, so it's more related with investment and savings. So you have to take all advantage that government might offer. So subsidies, tax reliefs, and so on. Let's not discuss about real estate and home because it's a long story, but have in mind that your home is more liability than an asset. Usually it is. And the last rule is save for long term and invest with a proper strategy. Proper strategy, nobody knows what it should be, but I'll show some of them for possible strategies. And that 6th rule that everybody fails, or most of people fails. So yes, they are saving, and then spend for better house, for a second car, for whatever. And they did that for 5. They were saving for 5 years, for 10 years, and simply they are spending their money for some needs. So this is a really important rule not to forget. And when we are talking about proper investment strategy, so I won't dig deeper into those, but just several examples. So what is the Buffett's advice? So he says that let's put 10% into bonds or cash account, and all the rest of the money should be invested through the most cheapest ETFs that invest into stocks, because they're simply stocks are returning the highest ratios. So if you take Talmud, so yes, it's Jews' Bible, so it's written more than 2,000 years ago, but it still sounds really good. I even follow this rule probably. So what it was written that let every man divide his money into 3 parts, invest 1/3 in land, so it's real estate, in business, so yes, it's stocks, and keep him in reserve. So let's call it bonds. So and if you follow this rule, so your return during past 50 years would be almost 10%. So it was really great, even without very significant volatility, of course, during crisis period. But so this is Talmud's advice, and the guy that I demonstrated in the first slide, it's Dalio. So his advice is to split your investments into a little bit different bucket, but part of it should go to stocks, into long-term bonds, commodities, and gold. And your return would be probably similar to Talmud's or even Buffett's advice. So this is an example, 3 examples of proper investment strategy if you save money and invest. So thank you.
Thanks, guys, for good stuff. It was sort of condensed into like 10-15 minutes. I think good advice for all of us. Now we will have 4 of the guys on the stage. Gražvydas will moderate. Vidas, our commoner colleague, is joining the discussion to be sort of a mirror of each of us in this group of experts, and let's see how the discussion turns out to be. We have Slido, so you can open your mobile devices, open slido.com, enter this number, and you can ask questions through Slido. Gražvydas will take care of questions during the discussion.
Yes.
Let's start.
Yeah, let's start. Good evening, everyone. As I was introduced, name is Gražvydas, and I will have a pleasure to moderate this discussion with the gentlemen here. Thank you for coming, first of all. Really nice presentations. Yes, Slido was already introduced. Pretty simple tool, but please use it. We will select a couple of questions. If you're, you can do it anonymously. You can put on your name if you would like then to clarify the question later on and so on, so we know whom to refer to. If you're not that tech enthusiastic, we have an old-fashioned mic that will be distributed around the canteen here, so you can ask questions verbally as well. But to begin with, I have my own pre-prepared questions, actually, that I would like to ask you, gentlemen. One of that is an illustration that I actually found, and I just wanted to put it on the screen. It's a chart, a map, basically illustrating the financial literacy. The data here we tried to find was somewhere from 2014-15, so maybe situation changed a bit. However, I think the tendency still exists. And why I wanted to show this, because I want to start the discussion from sort of a whys, not hows, not what, but ask some why questions. And basically the map shows that Lithuania in financial literacy is, well, below average. We're very much with all of the other eastern countries, Belarus, Ukraine, and we're far away from Nordic countries, Denmark, Sweden, Norway. We are actually even behind, well, we always like to compare ourselves with our neighbors, Latvia, Estonia, right? So we're even behind them. In financial literacy, and Vaidas, you touched a bit upon that we have a problem. We have those fast credits. So here goes the why. Why this? Why we're so poor in financial literacy in Lithuania? What is your opinion on that? Vaidas, maybe you touched upon that. You can start.
I think. Do you hear me? I think there's no tradition of financial literacy, of investment, savings. Our parents didn't invest. So we should start by ourselves. And this is the biggest reason, I guess. And our experience, our parents' experience was terrible with investments, because those persons who saved during late Soviet Union, so they lost everything. So those persons who started investing in early independence years of Lithuania, so they lost. So lack of trust and lack of tradition.
Okay. Vidas, you didn't have a chance to talk yet, so let's give a mic to you.
Yes, thank you, Gražvydas. Yeah, an actually interesting idea. I was actually likewise thinking about maybe past influence of our both historical reasons and then maybe cultural reasons. My personal, I'm not very well educated in finance myself, so it will be my personal opinion, but I do agree. There is some sort of a, both parent education may be missing slightly, but also it's school as well. It depends, we're being taught, all this citizenship disciplines, history, but are we being taught enough of, money management? We're living in capitalist world slightly, right? In Western, we want to be Western-like, so we should learn more about it. Also, but it's funny, you know, we can put blame on our parents. I also read that now there is this baby boomer generation. They can say, oh, you know, there were not enough saved for us. But now millennial generation is saying, thanks baby boomers, you raised the real estate prices. Now we need to take expensive loans for that. So, you know, the ball keeps rolling. So I don't know, what's Vaidotas thinking? Maybe what is the first step in our, you know, not the history, now we're today. So what do we do today?
Saving is not sexy. So who loves saving? Everybody loves spending. So it's another reason probably.
Mindaugas, I know you touch upon this quite in your book as well. So.
And I have 3 minutes. Okay, so yeah, first of all, I think that we don't, as a society, as a culture, we don't have a tradition of saving and using those money. Because look, most of our parents, they have some difficulties with the money they saved, and it disappeared for some reasons. And so yeah, whenever I'm sure that it will come when our children, when ourselves will start seeing the pensioners who are using the money that they were saving for their whole life. Then our children they don't have the question, do we need to do that? Because we will see that it's normal, it's okay, and it's a must in our lives. What's happening in other countries in the western part of the world. But what is more interesting, recently, it means like 2-3 years ago, I've heard, I don't remember the name of this person. He was going quite deep into why Lithuanian people, they don't want to be rich. Not consciously, but unconsciously. And think about it, and it was very clear to me. Just imagine 100 years ago or 15 years ago, what does it mean if you are rich in Lithuania? If you're a rich Lithuanian person? Death, or something similar to this. And so our grandparents, maybe some of our parents, they didn't want to keep money and to have them because it was a high risk that you will be arrested or something else bad will happen to you or your family. So this was the strategy of survival, to not have money or any kind of other assets. And yeah, this is why we do not sometimes, or unconsciously, we are not keeping money for ourselves. And this will change, at least as I see it, it's changing. It's not easy and it takes time. It doesn't happen like this in one night. And so if we start going to what from why, I would say that yeah, we should be the example for our own children, for other people, and so on, especially for our parents. I remember when I remember the first time when I started speaking with my parents about the fact that they need to do something for their pension. It took me 2 or 3 years for them to understand and to make a decision. And the dialogue that I remember very clearly was this, that I wouldn't want to take care of you. I will if I have to, but I wouldn't want to take care of you in your pension. So please do something now. And they say, okay, let's. And of course, I'm the brain guy in my family. I have to figure out what's the best solution or the strategy. They don't go there, maybe because I do that. And if I wouldn't, maybe they will do that. So yeah, it will come by next time.
Okay, we touched upon the pension situation and how you managed to pursue your parents. But we have a question asked by someone anonymous, but there was quite a few questions related. Is it enough, talking about pension and investing for pension, is it enough to invest in the second, third pillar? What's the value of investing in second pillar now after all the changes? Maybe that's not worth it. What do you think? And I will again want to start with Vaido because he knows probably a lot of pension funds. So
you were asking question, Wolf, is it safe to keep sheep? So starting with the question of is it enough to be in second pillar pension fund? So the answer is no, because
I don't know, how much would you like to have the percentage of your salary, of your income in pension? So how much would you like? So some studies say that you have to have at least 70% from your income. But if you imagine pension age like you are having a holiday, so I guess you could want even more during that period. But okay, so Sotra can compensate you up to 30% from your salary, from your income. Second pillar can compensate, can earn you additional 20%. So it's way too low. So it's just 50% from your income. So of course you have to save in other ways. So yes, third pillar might be an option. I don't know, buying ETFs might be an option. But yes, second pillar is not enough.
How do you see that? Maybe you guys can take over maybe your own experience. Do you use second, third pillars, or instead choosing something else? What would be the piece else?
Yeah, so I think all of us this year have answered this question somehow or another. So I thought, I like doing things myself. I'm an engineer in the heart, so I need to see how stuff works. So before I went to pension funds, I had to do it myself. I wanted to see what is the investment, where do I invest, how do I make these purchases of assets. So I went my own way. I instantly rejected second pension fund, and then afterwards I said, well, okay, if it is simple enough and I can do it on my own, maybe I should keep it this way. But the results will show. I cannot tell yet if it's good or bad. What is your experience, Mindaugas, on this one? Do you do that?
That's your number one rule. How do you pursue that?
Okay.
3 minutes. By the way, no pressure.
A few days ago, I got a message. I don't remember the name of the woman. She asked me to give some comments on what to do here. And I refused to give those comments in written form because I said that I already done that some time ago, and then people didn't understand what was the idea, and then they interpreted it, and then it became nonsense. So I'm taking a risk now, but I have very clear logic for myself first, and this is only for myself, this logic that I use. I do not recommend it to anybody else. I use all of them. I didn't quit the second pension fund, second pillar pension fund, because I already used the maximum benefit on the third pillar. So I'm taking those 1.5 extra percent because I already used to put more money in this third pillar tools that I use. So I'm okay with not having all those money at the beginning of my pension period, which you accumulate in your second pillar part, whatever you can call it. So yeah, this is my strategy, and this is what we decided to do it. And when I saw the question, is it enough to save for a pension through second and third pillar? The third pillar is not some funds. It's any way for us to accumulate money. And it can be very different. But this is the ways that we can combine together in order to have the safety, and to accumulate the more money that we can. And sometimes you can look at this through the percentage of the income that you are used to. But I'm sure that you don't know the level of the income at the time when you go off the second period and you will join the third period. So my logic is this: I have lots of Excel sheets, and one of them says this. If I say that taking into account the inflation rate, and you can take the look at the history, if I'm not mistaken, in the previous 20 years, it was the whole inflation rate is about 64% or something. We cannot make a decision that in the next 20 years it's the same, but still it's something that we can take as some kind of level. And so yeah, if I say that, okay, so according to my calculation, I would like to have 500,000 or 1 million euros when I retire. And so what do I need to do now, and what should I be doing with my income in the next years to my pension year, so I will have those kind of money. And there you go. There you can have, there you can model different ways. Some of you have more years, so you can maybe take more risk. Some of you don't have more years, so you can maybe choose the more safe strategies or tools. And this is how you do it. There's no one answer that fits for all of us. It's our own responsibility. Other people, financial advisors or neighbors or family members, they can share their perspectives, but still the final responsibility belongs to us. And yeah, my 3 minutes already gone. But I even used the strategy how I built this accumulation for the pension capital. So this is there's no one right strategy that fits for all of us, and it's interesting. It makes the game more interesting, but at the same time, this is the reason why people don't take this decision, because you never know if you're right or not, and that this is
let the time show, right? Another question that came up. I'm not sure who's Kiki, but Kiki is asking, what's the easiest way of start investing? If you have no experience, no knowledge, where do you start? And Billy, been there? Yes, that's my question.
I'm representing the average Joe. So, yeah, so the easiest way. Well, I don't know what is really the easiest. Of course, it's not by spending, first by saving and having something to invest, right? But then I think for me personally, easiest was, now it's not an advertisement, okay? So I thought, so who can get me something that I don't need to read, too much about it, and then I don't need to sign a lot of papers, and I just can get it. So where do I get these financial investment instruments? And usually it ends up, as I ended up in my own bank where I keep my funds, it was just so simple, and I went straight for the stock markets. I wouldn't call it investment. It was speculation. So this is not about investment, but it's how you get as close as possible to the investment assets. And then there needs to be right strategies for that, right? Discipline. I wasn't disciplined. And as you might imagine, I actually didn't do this. I might even done this, going slightly down with my superb skills. But it was good. That's the cost I paid for this real-life school. You need to pay something to get better at it. Or once by reading books, or maybe, practicing it. I might have paid less by reading books, like Windows, so,
I have the whole chapter here. But first, it's not the amount of money, it's the behavior. And I mentioned that before, and I will do it again probably, because it's important and I want to repeat that. First step, if you never ever try to invest, or even maybe it's the word that you want, maybe not for you, but for some people in one. So the thing is that we should accumulate the money that we can invest. We should start accumulating the money that we can invest. And we invest only the money that we can lose. We do not invest money that we cannot afford to lose in them. So we only save, it has to be like very specific goal, to save money for investments. And yeah, for some period of time we only invest for the first capital. And the first investment, it might be like seminar, events, or sometimes calling a colleague or a friend, inviting them a dinner and asking them how they do things. And I'm sure that most of you, if you start asking people that are around you, they will explain and they will share the different things that they do with their money, not spending but investing. So yeah, start saving them and then start doing. And me, the same. I had some investments where I was in the minus. I have to compensate even in some of them, and so this is how you learn. But just start doing it, because I know some friends of mine where we started to learn how to invest, different strategies, and the trainer was telling that, okay, if you want to start, you have to have at least, it was still in litas, and now I will convert to euros, so you have to have at least like 10 or 15,000 euros in order to start. In that time, I didn't have that money so I could invest. So I started with 3,000 litas. It's like less than 100 euros. And people told me that it's nonsense because you will pay more commission than your revenue. And I said, I don't care, because I don't care about the money, the amount of money. I care about the techniques and the behavior that I do. And so the first year I started, my return rate was 64%. And it wasn't, it's not the good experience, because when you just started and you have something about 50 or 60% rate, you think that you are the smartest guy on the planet. And those percentage of profits, like something around 13, what is he doing with his money? Because I got like 50% in a year. But I was listening to other people, and the second like recommendation would be start talking, communicating with people who does the same, and then you will start recognizing all the opportunities, all the ideas, all the strategies, and just act. And remember that in this game, sometimes you win, sometimes you lose. In some period, there will be times when you will lose more than you win. And it's not a short-term game, it's a long-term game. And we have to prepare for that. So for that reason, we need to build a strategy and to be okay. And from my own perspective, when everybody was following the Bitcoin, I didn't went there because I don't understand it. And I don't know how it works. And I'm too afraid. So 10% as a return rate for me is okay. And I know my friends, they say, no, I'm not that conservative. And I'm taking the risk and doing some other decisions. And I saw the question about taking the 100 euros, which brings you 100 euros in return. So this is what happens when you start speaking in 15 minutes. So my calculation is this on this example. If you take 100 euro a month, and you save it, and you invest it, so you invest 1,200 euros a year, and if you earn like 9 or 10% in return, so you get your 100 approximately euros. So this was my logic in this example. And for the last 3 or 4 years, it's the actual rate that I can get myself, starting from 10 up to 20% each year. And I'm sure that it will be some years when I will be with a negative rate, and I'm cool with that.
Anything else? Billy?
Short comment. Yeah, it's impressive. I just want to second. I think the hardest part is not 1 year's goal, right? What you said, like it's impressive. The 60% return, those double-digit returns are impressive. Exactly. But yeah, it's like in casino. They get you to win first, then you're dead, right? So exactly. Then you bring in. Okay, now we go 100,000. Gone. But I mean, what I want to say is the long run. What we talk today is the long run. It's not like tomorrow you need to buy a new Lamborghini or something with that money. You need to be ready for the long run. So average return of even probably 7% or less is actually good because it's positive, right? It's not spent. It's above inflation. Compound interest. So yes, this is very important thing. And greed and fear is also something that actually affects your discipline. Sometimes you get more greedy, and then you start investing more, but then it's fear when you see those money burning. That's why I think it's important to invest something that you can actually afford to lose.
Barry, anything to add? Compound interest?
I'm always comparing investing with riding a bike.
So you don't need to be a professional to feel the pleasure of riding the bike. So if you want to be professional to go to Tour de France, so yeah, so it's like something I'm doing. I feel professional. I dig deeper into some statistics, balance sheet, and so on. But if you would like just to feel the pleasure of riding a bike, of investing, so you don't need to do something really serious. So what you need is to open an account and buy ETFs like Buffett offers. So save every 10%, invest into cheapest ETF. That's it. Of course, it's not sexy, but it works. And the less decisions you make, the better. And the best thing you can face with is to see losses in your account at the beginning of the period. Because if you just started accumulating 100 euros per month and you see that equity markets went down by 50%, so that's the best thing you can see, because you just lost, okay, so how many? 500 euros, so whatever. But after that, you might earn much more money, because you at least have some experience by technically doing investments, and that's the best thing. But the less rules you have, and unless you follow them, the better.
I remember the strategy that I used, which gave me like a double-digit number in return. So it took 15 minutes a month. At the end of the month, I should open the finances.yahoo.com, copy the number, paste it in the Excel sheet, and there you have it, either 0 or 1. If it's 1, do not do anything. If it's 0, sell it and buy, sell stocks and buy obligations, and that's it. And I didn't have to do that because it always went 1, 1, 1, 1 because of the market, because of the time. Yep.
By the way, there were some questions on what's the name of the book where you advertise so much. So Giedrė already answered that. Ko niekada neišgirsite iš bankininko. Welcome to the bank, Mindaugas. But yes, if you wish, look for it. I believe it's still on sale, isn't it?
Yeah, probably.
But Vaidotai, we touched upon ETFs a bit, and there's a question on ETFs, digging more deeper into some technical things. But some people are asking that. Let's explain more on that. So first of all, maybe few words on what's an ETF, so that we're sure everyone's aligned and know what it is, and then some advices. American, European, Lithuanian ETFs. What is your opinion on where to go first, maybe?
There's not so much providers of ETFs. I think there's main five providers, and whatever you choose, it's still okay. I see in the question, is it worth investing from Europe? For sure. Even pension funds invest in ETFs, European registered ETFs. So they are just simply registered in Europe and invest in US market. So no problem with any legislation or whatever. And what can you choose? So of course, if you choose to invest into, let's say, global equity ETF, so you don't need to do anything. So simply buy every month, and that's it. If you decide to choose America versus Europe, Europe versus South Africa, so you are going into professional sphere, and because you are guessing which is better, and nobody knows. If you are lucky, so yes, you could earn more. But if you are not lucky, because I don't know, Vietnam is popular now, so you might lose more than 50% in that way. So I don't know if I answered the question.
Partly. Vidai, maybe I know you're familiar with ETFs as well.
I am familiar, but not by touching them or buying. I think maybe I will. I'm not very experienced trading ETFs, but of course, it's probably the easy way to get somewhere without overthinking. It's probably spending less time on gambling, maybe, because some people, like I say, some people, hint hint, it's me also. Even especially in my early investment career, I picked stocks. I tried to price them, time them, and I did all the mistakes. And it's just because you don't know something. With ETF, it can be something like even a fund that invests in an index. An index is a set of different stocks that are traded in one or other venue. So you don't need to pick. You just say, I want to invest into equity markets. That's it. I want to buy that. And then you keep the thinking for somebody else. And then you buy something that is a bit diversified. Meaning if one company fails, well, there are plenty of them left in the index, probably. So this is better. But it's not fun, again. It's not sexy because, I just bought something that I don't, know even what's the content of it maybe. What are those 500 companies under that fund? But it is probably better than what I just told in the very first start of my answer.
Okay. Mindaugai, not sure. Anything to add?
I just add,
Okay.
I could add two sentences. So what might be more sexy if you buy the stocks of companies that you are using their services by production. So that might be even more sexy in that way, and probably that could be a good advice, because if you are using and you are satisfied with that, so why not?
I'm more conservative investor, and I would say that whenever you want to start from learning and training. And we are having a conversation through different perspectives. We are sharing some experiences that we have done or we are doing, but still, your situation is different. And I would say that first you have to feel the hunger for the investments and start earning and getting the passive income. Now, how can you do it? There are plenty of ways. And what are the best ways for you is just testing and experiencing it. For example, I know that, okay, my game is investing in real estate. My game is investing in ETFs. But I know that my game is not investing or speculating, because it's very comfortable and nice feeling when you wake up in the morning and you see that, oh, while I was sleeping, I gained like 500 euros. Nice start of the day. But when you wake up and you see that, oh, I lost 500 euros, it's not okay for me.
Well,
because I feel not okay. I communicate with other people with this like negative emotions, and so I decided, okay, for some people it's quite fine to feel those emotions. It's not fine for me, so I stopped and I became more conservative, I guess. So my final thought on this is, look for the training and start learning together with the people who know how the things work. And there are plenty options in Lithuania, so you can Google it. I will not say or name anybody here, but I'm pretty sure that there are plenty of it which I know, and there are some that I don't know. So start learning. It's a process, and the first investment that you will make from the money that you accumulate and save for the investment will be for your training. So you know what to do. And even if I didn't have to do anything, because the Excel sheet showed me that you don't have to do anything, but still you have to understand the strategy, the reason behind it, the modeling, how to do that, and why you do this and not that. So yeah, this is my...
okay.
I don't know if it's not very popular idea, maybe, but...
Well, but still, someone asked for it, we had a shot at it. We're being asked to try to go as fast as possible. We only have 15 minutes left and we have plenty of questions. So brief answers, guys. But one thing I want to touch, and I believe Vaidotas was one of what Vaidotas listed in his tips, is to use tax reliefs or take advantage of those. what is the best ones, or which ones we should look for, which ones you should use, most popular ones maybe?
Very short answer. Second pillar, third pillar, life insurance. No other tax reliefs. That's it.
Very brief. I succeeded and brief. But as far as I know, what is that? Is that third pillar and second pillar, if you pay above the normal threshold 3%, you get back your income tax, 20% of that, up until what? 300.
Yes, tax relief for life insurance or third pillar is capped at
300 euros. What
300 euros, something like that.
Basically, what you can get back.
So that means that you can invest around 100, a little bit more than 100 euros per month. So it's not so.
If I can put my 2 cents, then another good tax relief is whatever you invest in putting a deposit, or even investing in peer-to-peer markets up until 1,000 euros of income is not taxed. So you can earn up to 1,000 per year, and you will not be taxed on those. You will need to pay taxes on what's above the income tax. So
Isn't it 500?
it's 500, sorry. Now my thinking is 1,000 per family.
Yeah.
that's
I thought
that's
so.
why I said 1,000. Yeah, well, more family. All right. Another actually interesting question was somewhere, and that was on peer-to-peer investment. New trend, new sexy thing on the market. Any advice? Mindaugas, I know you were active there in the peer-to-peer market. What can you say about that? Worth, not worth it? Briefly.
I'm using it. It pays me between 10 and 15%. And sometimes it's hard to calculate the actual rate, because you never know which loans that you provided to other people will return, the ones that are late already. So maybe they will be okay, or maybe they will be defaulted. So I calculate a few years now. When I have the history in my portfolio, I calculate the amount of the capital that I invest in peer-to-peer, all the platforms in all different countries, and then I calculate the income that I actually get. So this rate is in different platforms, it differs, but general number is between 10 and 15%. So according to my conservative strategy, it's okay, and I'm still using it. Now, like for myself at this moment, I try to accumulate the money and to be prepared for next few years investing in real estate, because I felt that this is my game. I'm done that a few times. It worked, and I think I know how to do it at least at this moment, and so I'm preparing for that. But I'm still leaving some part of my portfolio in peer-to-peer lending.
Anyone else using that?
No, I don't use it, so I'm not expert.
I don't use it as well. I'm a bit more I'm not conservative to waste money on stocks, but I'm conservative for some reason to waste money in peer-to-peer, but no. By the way, do you do different currencies in those peer-to-peer lending platforms, or it's single currency based? Only euros, yeah. So you're reducing the currency risk. Okay, cool.
I'm also using peer-to-peer investment. So far, interesting, and as Mindaugas said, quite good returns. However, one thing, if I can just chip in, again, my 2 cents, one thing that we need to keep in mind probably when investing in peer-to-peer investment platforms is that this is a relatively new thing in the market, new way of investment. And it's important to remember that this way of investments did not have any, it basically emerged after the crisis. Maybe there was something, some starts, during the crisis, a bit before, but it basically boomed after the financial crisis. So technically, it did not survive a real crisis. So we do not know yet how these investment platforms can survive huge crises. So maybe something worth considering when you're considering whether to invest there or not. So
I have this argument for myself that there's nothing new actually. It's the where do we take the capital to lend the money for people? Either it goes from the bank or it goes from directly from the people. So this is just different mechanics.
But that's the difference from law perspective. So we don't know how it works after defaulting and coming back, how it will come back, the money to you.
Okay, yes, still wanted something? We're more or less going into the end of our time here. So one of the last questions, and there was also a question here, what you would like just recommend. You talked, Mindaugas, a lot about investing into learning, and all of you mentioned that. A book, a seminar, a lecture, something that you can recommend to start at learning, investing or general finance management. Vidai, I see you nodding,
so yeah, I'm nodding. Of course, you need to learn. You cannot be a jackass and do all sorts of experiments all the time. But it really depends at what level you are, of how sophisticated your knowledge is right now. For me personally, after some years, I read a book called The New Market Wizards. I really liked it because it covers all the asset classes which are being traded on the exchanges and off exchanges. So it gives you a very horizontal and broad perspective into financial instruments. But it's a bit heavy on the, vocabulary of markets. So you need to be prepped a bit, or you need to have, your translation service running on the computer on the side. But it's also fun because it's driven by the stories of people who trade it and how did they earn money, why did they like the instrument. It's not that they invested, they traded. Meaning they try to earn commission by trading, or they try to, do some sort of financial actions for somebody else. So it won't give you, all the golden rules of what we're talking here and now about investments, but it will give you understanding of why even we have those markets, why people want to buy one thing or another. So that's maybe the favorite one.
Vaidotai, have your own favorite?
Probably no, I don't have my own favorite. Of course, I can mention probably 10 of them. From saving perspective, such a simple book as Next Door Millionaire might be really good book, very, very simple. New Market Wizards sounds a little bit with technique, and you shouldn't start with that one. Even I link the link I provided in the presentation from asset allocation book is really good, and you even can start with that one because it covers many strategies, nothing difficult to understand. So probably it might be used as a good book.
Okay. I see Mindaugas already started Googling books.
I wanted to be exact about the name of the book. So I was... it would be strange for me to say this. So I was impressed by the book, which is called Unshakable by Anthony Robbins. And there was I was reading it at the same time while I was writing my own book, and there I got the risk that I wouldn't like to copy the ideas and the structure and the whole essence of the book, but still I want to have and grab the essence of the understanding of the idea. So I really liked it. It's more from the principle point of view, and if you want to have more from the practical point of view, so I have this recommendation. I know this guy, we have met, we have communicated, and I really liked his work. If you go to the investologia.lt, you will see a lot of information which is free to use, free to have. about stocks, about ETFs, about obligations, about different tools, different strategies. And Justinas, he's the author. He has an ebook which is called Strategy, that most of us should start investing, and 91% should keep to this strategy of the investors. And then you can find other books like ETF funds, practical investment guidelines, or whatever you can translate. So it costs you like, I don't know, 3 daily meals, and you have those books, and this is like quite good stuff. I really recommend. And I know Justina's attitude, his value, he's quite strong, and he's quite sharp at investing. And so yeah, if you want to start there.
Quick question. I'm very interested in your opinion, Mindaugas. You know the community called Money Mustache. It's like open-minded community on the internet who talks about saving money, retiring early, investing, making sure that you have something, for your bright future. I know there is already one in Lithuania, actually, called Baltic Mustache.
Yes.
It's you can find it in Facebook or in internet just by googling Baltic Mustache. I think it has a lot of these questions in there.
Yeah.
Third pillar, second pillar, what's the investment platforms, how do you get some specific instruments? Though treated with a bit of caution, it's of course, as I'm opinionated, that thing is probably opinionated. All of us, we have opinions, and we pick things that we like. You might not like it, but you can go there and check it out. It's not big as book. You just open, it's a blog. And you can even follow it on Facebook, so whenever you scroll before you get asleep, you cannot look at these dogs and cat pictures, but you can read about the, investment or saving. But if you don't, I was interested, maybe and maybe what's the opinion? But cool.
I definitely second it. And there's a question: are there possibilities to invest in ETFs, and what kind of ETFs? So there was a recent post about ETFs in Lithuania and the platforms how you can invest into ETFs, and they're ranked and everything. So you can visit the page and get
Baltic
the answer.
Mustache.
In Baltic Mustache, that's correct. Yes, we're at the very end of our discussion today. Unfortunately, we have quite a bunch of questions still stacked up, but time is up and we cannot get them all. But I want to finish as our lecturer's name. Today, our meetup name was called First Change You Can Make. So very briefly, one sentence from everyone. One change you can make, one change you would recommend to make from today for everyone. So as a checkout, Vidai.
Stop spending. No. Start learning or doing something. That's the first step. You will learn the ropes, don't worry.
I would say start doing, start investing. Not learning, but do.
One sentence.
I was prepared for that. I didn't say this before. Respect every euro you have and you earn. Respect it, and it will respect you.
Okay, gentlemen, thank you very much for coming.
So we will have a bit of presents for our dear guests. Thanks, guys, for coming. It was real joy to listen for you discussing. Thank you.
Ačiū Vaidotai. He's local.
only two presents. Now, we basically intentionally set the timing for the meetup to be 1.5 hours, conscious of good weather and all these sort of good things. But, we had many more questions. So if you guys want to get your specific question answered, come on over here and you can easily ask personally and just get those answers. And for the rest of you, thanks so much.